Alright, so this is where we last left off. We just paid $100 deposit for the gas company. Okay, so now we are here. We decided to do another purchase order, but this time, this purchase order requires a down payment. Okay, so we decided to go ahead and purchase order a one commercial coffee brewer and one commercial coffee grinder. Okay, so the total cost is going to be $3,515. A third down payment is required. So here someone calculated to be 11.40 and 22 cents down payment. Okay, so how are we going to record this? Now this is a down payment. This down payment is going to go towards our actual bill when we receive our bill. Okay? So in this case, right, most important thing is we need to remember that we're going to be making a purchase order, right? And that this down payment is going to go towards the bill. So this is what this vendor requires because they're looking at what we're buying and they don't trust us that we're going to pay them back. So they require us a down payment. In this case, they say, give me 1/3 of the price. So this is what we calculated to be $11.40 and 22 cents. Now, of course, best way to do is you're going to be mailing out a check because it's for $1,000, right? You wouldn't be necessarily having $1,000 shoving in an envelope and mailing it out. You definitely want to make sure that you write a check, okay? Now, in this case, what do we need to treat this down payment as? It's not a deposit, right? But it's definitely going to be considered a prepaid account, okay? A prepaid account, right? Because again, what we're doing is we're basically paying the vendor in advance, right, for a voucher, okay? And that voucher will be applied when we receive the bill, okay? So that's the important thing that we need to do. We need to note here is that there is a down payment, okay? So let's go ahead and first off, let's fill out our purchase order first so we know what the amount we're looking at, okay? So purchase order, right? This is our third purchase order. So 7/03. We're still on the same date here, the 6th. This time we're purchasing it from Hallie Bros. Okay. What are we buying? We bought a coffee brewer and a coffee grinder. Okay. We're buying one of each. Now, in this case, unit cost for the coffee brewers $2,266, while the coffee grinder is only $1,249.95. Okay, so let's go ahead and tally up these totals here. Okay, so one coffee brewer is going to be $2,266, and then one coffee grinder is gonna cost me $12.49.95. So that means in grand total, we owe is going to be $3,515.95. Okay. You can choose to do so if you want to. You can add your down payment so it reduces so you know what your billing should look like. But in this case, right, we don't necessarily need to put it in here. We just know that, hey, we're putting in a down payment, and this is how much it's cost me. So I need to take 1/3 of that, right? 1/3 of this amount to get me my down payment. So it's up to you. You can mark your down payment in here if you want to. It's up to you how you want to fill out your purchase orders. In this case, I think this is good enough just because now I know I need to take 1/3 of 3,515 to get me my 1140.22. Okay? So that at least I know this much, and I can use this because this is going to be considered my down payment invoice, right? So now let's go ahead and record that I'm making a down payment. So once again, I am on page 2 of my journal. It is still the 6th. We're making a prepaid account because we're making an advance payment. Okay. And of course, I'm going to be writing a check. Okay. So our prepaid accounts is 18,600 and 10,100. How much we're running the check out for? 1140 and 22 cents. Okay. So I need to cut myself a check or cut them a check. So I'm going to go ahead and go here. It is the 6th. We wrote the check for 1140 and 22 cents. To who? Hallie Bros. What for? Down payment on brewer and grinder. Okay. So here I have check number 1506. Okay. So who did I write this check out to? Right? That's the important thing that you should have in your description is who did you pay? We paid Hallie Bros. Okay. What was the invoice number? In this case, there was no invoice number, right? It was we were putting it on our purchase order. Our purchase order basically told us basically how much we need to pay Hallie Bros, right? We said 1/3 of the full amount, right? So in this case, I'm going to put my purchase order number 17303. Right? Purchase order number 170,303. Okay. And it's just supposed to be 1/3 down payment. And we used check number 1505 as proof that we made this payment. Okay. So let's go ahead and fill in our ledger because now we're done with our journal. Let's fill in our ledger so that I can show you how we would fill out the subsidiary ledger. Okay, so I made a prepayment and I made a checking. So ledger. Okay, so I'm right here down on my deposit. So right here's my prepaid account. Okay. 1/3 down payment on brewer and grinder. Okay. We are now on general journal page 2, right? We started a new page of our journal. Okay. We have it for 1140 and 22 cents. So therefore, we added to our prepaid accounts. Now, if you remember, right, for every formula I put in here, so my first formula is right here where the 66 54 17 is, right? If I double click on it, I can see my formula right here. So what I can do here is I can also drag that formula down so that I automatically get it calculated, right? If I click on this, it will take its relatives. It will take the next row down. So in this case, it will take my 66 54 17. It will add the 11 40 22, and it will subtract 0 to get me a total ending balance of 77 94 39. So again, using Excel is extremely important because it allows you to make your calculations a lot quicker, and it will make it a little more accurate, right? As long as you punch in your numbers correctly. Instead of having to take your calculator out and have to manually calculate this, right? It does the work for you. Okay? So there you go. I have 77, 94, 39, right? And I also have to make note that I cut a check out. So therefore, I have to update my checking account. Okay? Because I wrote check number 1506. General Journal 2 for 11.40 and 22 cents. So therefore, that dropped my value from 11,361 to 10,221.07. So there you go. It adjusted my checking account. So this is how I want you to fill out your subsidiary ledger, because now that we finished our journal, we finished posting to the ledger. So now the most important part is updating the subsidiary ledger. In this case, right, I made a down payment to Haley Bros. That means Haley Bros owes me money or owes me my equipment that I purchased. So in this case, that is something I need to keep record, because if they come back at me and said, no, you didn't make a down payment, we can come back at them and say, yes, I did. Here is the proof. Here's the paycheck. This is what you agreed on, and so on and so forth, right? So that's important that we keep track of that as well. So Haley Bros right here. Okay. Today's the 6th. Okay. What do you want to record here? That we made a third down payment on grinder and brewer, right? And our proof was through check number 1506, right? But our other proof too is that it was on our purchase order number 1707303. Okay? Our purchase order also is proof that we submitted to them, so therefore we made an agreement to make a third down payment on the actual invoice. Okay? So in this case, post reference, right, we paid them on general journal number 2. So here's what's important. We haven't actually received the bill yet. Okay? But we know this much, right? We know that the purchase order told us that we had to make a payment for 11.40 and 22 cents. And of course, because we had a down payment, right? This is where I'm going to say, yes, I paid using check number 1506. Now, question here is, what about the prepaid amount? Didn't we make a prepayment? Yes, we did. And I'm going to show you what happens when we actually receive the bill, because that's where we're going to be actually using the prepayment account, is when we receive the bill. But for now, we need proof that a transaction has occurred, which in this case, we have the receipt, which is the purchase order, right? It told us that it's a third of the price, so it's 140.22, right? And we paid with it using check number 1507. So plugging in that same exact formula, once again, you're going to go invoice minus prepaid minus allowance minus returns, or minus discounts minus payments. And right now, I owe Haley Bros nothing. Why? because that's what it says, because the billing amount was this much, right? Well, what happens if I didn't have that, right? Because let's just say I only made a payment, right? It's going to show up that I wrote a check out for $11.42. Okay? So then when I do receive my invoice, right? What if the invoice was much higher? What if it was $4,000? Just for example, okay, $4,000, right? If I were to do this and plug in my formula, then yes, it's true, right? But that's not what my billing statement says. It doesn't say I owe $4,000. It will tell me I owe less than that. Okay, it will tell me that I owe $1,140 less. So this right here is not true. So how do I make this true? Then that's why I'm going to show it to you this way, is that I'm going to wait till I receive the bill and then we'll use the prepayment amount. Okay, but for now, just trust the process. Okay, it should, I want you to do it like this. Okay, at least it gives us a trail of transactions, right? It gives us proof that, okay, yes, this is the first thing that happened. This is the next thing that happened. This is the third thing that happened, okay? So we want to be very, very aware of what we're doing. So in this case, right, this is proof that a transaction has occurred, but it also gives you a guidelines of what happened. So in this case, this is what happened. I had to pay a down payment, and that's this right here. Okay. So now that I just did my down payment, right? Let's see what has happened next. We end up purchasing from restaurant supplies, okay, on an account, all right? And of course, you finance it for a 12 months with 0 APR. Payments are after 12 months will be subjected to an 18% interest. So this is what we bought from restaurant supplies. We bought a cash register on an account. So what do we do with this? How are we going to record this transaction? I purchased a cash register on an account.
Prepaid account and check.
Not prepaid. I went to the store and purchased it.
Purchase expense.
Purchase expense is only strictly used for inventory. Am I going to be selling my cash register?
No. So it would be payment.
Payment. Do we have a payment account?
No.
What did I buy?
A cash register.
We bought a cash register, right? What is that?
Is it supplies?
It's not a supply. Look at your chart of accounts, right? We already established that it's a fixed asset, right? You said it was a fixed asset, right? It wasn't inventory. So we bought it. We went to the store and bought it. So what is that going to appear on our books as?
Account payable?
Accounts payable when we pay it, when we put it on an account, right? But in this case, accounts payable wouldn't actually fit this description. Okay? Okay? Because here we have a condition, right? We have 12 months to pay for it. But we also have the possibility of making the payment after 12 months. What do we call this? If you're able to owe somebody and make defer payments on it, what account is this going to be? This was chapter 2. I acquired a cash register. So what does that mean on my books? What did I buy?
Cash register.
You bought a cash register, right? So in this case, 14,050. You bought a cash register. Okay. On 6/6, you bought a cash register. Okay. 14,050. Okay. And I bought it on an account. However, my account is flexible. I don't necessarily have to pay within 12 months. I can choose to pay after 12 months. Okay, if you remember way back when in chapter 2, so about 10 weeks ago, right? There's a specific account that says that when you owe people money, right, you have the capabilities to either extend payment, like you can choose, right, to either pay 6 months, you could choose to pay 12 months, or you could choose to pay after 12 months, right? It's like an IOU, but more lenient because you can always make payments later on. You can always choose to defer the payments. What account am I talking about? It is a liability because you owe people money. However, what kind of liability? All right. Which kind of liability are we talking about here?
Short term.
Short term, which in accounting we never say short term. We say current. Okay, now let's take a look at all the accounts. If it's not an accounts payable, because accounts payable is where you have a defined due date. In this case, right, I have the kind of due date that can be flexible. It doesn't necessarily have to be done in 12 months. It could be done in 6 months. It could be done in 18 months. So by looking at my chart of accounts, what account do you think this would fall under?
Is it accounts payable?
Not accounts payable. Like I mentioned this before, accounts payable has a definite due date.
Visa payable?
Do we have a credit card? Do we pay with the credit card?
No. Notes?
Notes payable. Notes payable is where it's an IOU, but you can take advantage of making payments, right? You could choose to pay now, you could choose to pay later. You can extend over 6 months, you can extend over 12 months. So in this case, notes payable is one of those accounts that has flexibility. Okay? And that's exactly what we're going to do. So notes payable for 23,000. Okay? Now, how much is my cash register? How much in grand total is my cash register?
$649.50.
649.49, right? Because in this case, it's a fixed asset, right? We went to the store, we went to the actual store, restaurant supplies, and purchased this in store. And now we're carrying it back to our store, right? So in this case, what are the other extra costs it takes you to get that asset to your store? You need to pay sales tax. Okay, so that's going to be included in the price of the cash register. So right now, my cash register is worth $649.49. Okay, and we paid on an account. So therefore, you have all the information you need, right? We purchased this from Restaurant Supplies. We have the receipt number. Okay, so sales receipt number 001487. Okay, you have the account number. $5,698.12. You don't necessarily need to put it on your journal, but it's definitely something you need to put in your subsidiary ledger. And that's it. Okay. So now that I have it here, I need to plug it into my my ledger now. Okay. So here we have a cash register, which is an asset. Okay, so let's locate it. Okay, here you go, cash register. We purchased it. Let me see, what was it originally? It was $599.99 plus $49.50 tax. Okay. We're in our second journal, so I acquired this fixed asset for $649.49. Okay. And this is my very first liability account. Okay, so we're going to tap into liabilities. Okay, and let's see. It wasn't accounts payable, it wasn't Visa payable, but we paid on an account through a notes payable. Okay, so you can write here, purchased cash register on account, 12-month payments. Okay. At a, okay, what's the interest rate on this? Interest rate is going to be subject for 18% interest in case you pay after the 12 months. So again, when you get a 0 APR for 12 months, that means you're not going to get charged interest for the first 12 months. But after the 12th month, then you start getting the 18% payment. So that means you don't even need to pay until the next year. Okay? All right, post reference, general journal page 2. And since it's a liability, I owe $649 on the credit side. Okay? I will show you how to do the running balance on the liabilities once we get a second transaction in here. Okay, so this is the first one, right? It's going to just be equal to whatever the amount is listed as. Okay. Right? So that was the journal, then the subsidiary, then the ledger. So now I need to fill in the subsidiary ledger because what if I need to return the cash register? Maybe the buttons don't work. If that's the case, I need to hold on to the receipt and also know how much I'm going to be getting back out of this. So let's see, restaurant supplies is our restaurant supplies right here. Okay. What did you buy from restaurant supplies? You bought a cash register. Okay, I'm going to put purchase. Cash register. Okay, on an account number. Let's see what my account number was. Account number 569812. 569812. Right, that's my account number. And I made a 12-month 0 AP 0% APR. Okay. After 12 months, you're going to be subject to an 18% interest. Okay. What was your invoice number, which was going to be your sales receipt number? So let's see, what's my receipt number? 001487. Okay, so that was my receipt number, was 0048. I think it's 1487. Okay, post reference, page 2. No terms because I paid at time of purchase. So in this case, no terms. What was my invoice amount? So what was my sales receipt total? It was a grand total of $649.49. And did I make a payment to it? No, I didn't. I owe restaurant supplies. So let's go ahead and plug in my formula once again. If I'm going to start out with my invoice number, okay? Anything that decreases my invoice number is going to be any prepaid, any returns, any discounts, and any payments, which in this case, I didn't make any. So therefore, I owe $649.49 to restaurant supplies. And this is how I use my table to see where the money I owe and so on and so forth. So in this case, this gray box here, right, should be an equal sum. So you know how much money you owe in grand total to restaurant supplies as a vendor. So right now, I owe $649.49. Okay. So for instance, let's say I make a return, right? I end up returning my my cash register, right? That's going to mean I'm going to get back $649.49. If I apply this formula all the way down, it's going to now show me that I have a negative $649. So therefore, I owe restaurant supplies nothing. Okay? But in this case, I do. I owe them $649.49. Right? And that's how I use my subsidiary ledger. Okay? Right? You with me so far? Okay, so I purchased my cash register, okay, for the $649. Let's see what is next. Okay. Next we have here is the next day. So it is now Friday, June 7. Okay. We end up hiring LV Remodeling Company to remodel the store area. Okay. Do I need to journalize this transaction? Hello? Question was, I hired LV Remodeling Company for remodeling the store area. Do I need to record this transaction?
Yes,
Why?
No.
because we will pay them.
There's the word, we will pay them.
Mhm.
Do we know how much we're going to get charged?
Yeah, because we need to say how much we gonna be pay them.
But my question to you is, do you know how much you're being charged?
Mm. Until they finish everything, we will be known. So we don't have the details, the final details.
Exactly. Because all we did was hire them.
Mm-hmm.
They didn't complete the job yet. So do we need to record this transaction?
Not yet.
Not yet.
Until we have all the details.
Good. Okay. Then we end up receiving Kim Robinson's recommendation, and it came in a bill for $1,000, and it's due in 3 days. Invoice number 1542. So what do we do with this transaction? How are we going to record this? Because I never stated I was going to pay. So if I'm not going to pay now, what does that mean? And it's due in 3 days. So Kim Robinson sent us her bill for $1,000 for the recommendation on how to design the store, and this bill's going to be due in 3 days. So what do we do with this bill here?
Notes payable.
Not notes payable, because there's a definitive date. There's an actual date that you can pay. You don't get to choose to pay Kim whenever. So you wouldn't use notes payable.
Prepaid account.
This is, we've already hired Kim Robinson already. She's completed the job and now she sent us a bill. So in this case, it's not a prepayment account because we didn't pay her in advance for anything.
Okay, so we're writing a check.
We are not writing a check. We're not paying her now. We have 3 days to pay her, and we're going to pay her in 3 days.
So nothing. We don't do anything until 3 days.
Well, no, because we were billed.
Mm,
We were billed for $1,000. What account would I use to say that I owe somebody money?
accounts payable.
Correct, right? I would be using accounts payable because I acknowledge that I owe Kim Robinson money. Okay? Now, in this case, right, what kind of expense would this be if I got a consultation for a interior design? Let's take a look at my chart of accounts. We already know that's going to be some kind of expense because it wouldn't fit any other category, right? We spent money to fix our store or in this case, we spent money to get a consultation on recommendations on how I should design my store. So in this case, let's take a look at what kind of expense would this be. Okay. Is it an advertising expense? No, not really. I didn't buy advertising because I hired Kim Robinson to do a job for me, and that's just to give me some recommendations on how I should design my store. Is that in any ways of a advertising? No. What about a bank feed? She's definitely not my bank, so that can't be possible. Business expense. That's very likely because this is something that you bought that you spent for designing your store. So that could possibly be a business expense. It's definitely not freight expense because once again, this is an inventory. Okay? Insurance expense, of course, you didn't pay Kim for insurance, nor did you pay her for interest expense. What about labor expense? Did she actually work at your store? No. All she did was give you recommendations on designing the store. Is that in any means of labor? So no. Definitely not labor. She's definitely not someone you talk to buy a license from. You didn't sell anything to her, so you didn't lose any money on assets. What about office supplies expense? Did you use her to use your office supplies? We don't even have office supplies to begin with. Is she someone that's going to be on your payroll? She's just a regular consultant for a designer. Is she in any means going to be someone that you could utilize to work at your company? She's a designer consultant. So can she work at our coffee shop? She can, but she already has her own job. She already does she's a designing consultant. So in this case, she shouldn't be the one that's pouring the coffee. Okay? So definitely not payroll. Okay? Purchase expense. Is she someone you contacted for inventory? No. Rent expense, travel expense, utilities, bad debt, depreciation, amortization. None of those expenses fit except for business expense. So in this case, this must be a business expense. Okay? And that's what we're going to do. We're going to recognize that Kim Robinson billed us because we hired her to do a business expense. Okay? Which was account number 6,200, I think. Let's see. Business expense is 6,200, okay? And we established that we owe her money, right? We owe her money on an account. So therefore, we're going to put this as an accounts payable because we're not going to pay her now. We're going to choose to pay her later. And there's a definitive date, meaning it's due in 3 days. So that means we have to pay her in 3 days. We can't choose to negotiate with her to say, can I pay you next month? Can you pay you next year? No, she wants the money in 3 days. Right? So therefore, accounts payable. Right? And how much did she charge me on her bill? She charged me $1,000. Okay? So, we have all the information we need, right? Who did we receive a bill from? We received a bill from Kim Robinson. Okay? We know that because we were billed with an invoice number 1542. Okay? And when is it due? It's due in net 3 days. Okay? Doesn't look like she gave us a discount. Okay, but all we know is This bill is due in 3 days. Okay? And that it's from Kim Robinson, and we know this because of the invoice number 1542. Okay? So now we finished our journal. Now we need to go ahead and go and plug that numbers into our ledger because now we owe money. Okay? Starting with the first one was a business expense here. So we're going to go to operating expenses right here. Business expense is the third one. So we can go ahead and say it's the 7. We received a bill from Kim Robinson, all right, for interior design consultation. Okay. We're still in the second journal, and because we spent money to do a consultation for the store, right now we incurred $1,000 expense. Right? However, we didn't pay her yet. Right? We decided to say, you know what? We'll pay her later on. We'll pay her sometime down the week. Okay? Because right now, we're still building our company. We have a lot of other things that we need to take care of first. Okay? So in this case, we're going to record in our accounts payable account that we received invoice number 1542. Okay? That should be good enough information because I can pull this information up and I could be able to see, right? If I look on journal page 2, I can look up this invoice number 1542 and figure out that it's from Kim Robinson. Okay? So again, because it's a credit, I owe money, right? Therefore, my first amount that I start off with saying is this first bill is what increased my liability to equal $1,000. Okay? So I owe right now Kim Robinson $1,000. Okay? And I need to put that in my subsidiary ledger because I need to make a note to keep in mind when I need to pay her. Okay, so again, Robinson Kim is right here under restaurant supplies. Okay, and you can fill in all the information. So you could say interior design consultation fees. Okay, invoice number 1542, post reference. Once again, this we wrote this in our journal on our second journal here, second page. Now, terms. Was I given terms? Yes, I was, right? I was given that I owed in 3 days. So that's going to be considered net 3, right? You're not necessarily, a term is just telling you what is the end date. That's the most important thing about terms is you're not obligated to either receive or give a discount, right? You do need to lay out how much or at when your bill is due. So in this case, this bill is due in net 3 days. So that means no discount due date because she didn't give me a discount. However, I do actually have a due date. So if this bill isn't due in 3 days, when am I expected to pay this bill off? What date am I expected to pay this bill off? If I receive the bill on the 7th and and Kim says you have 3 days to pay me. What date am I going to make a payment to her by?
June 10.
June 10. So that's correct. Now, how do I use Excel to be able to calculate that for me so I don't actually have to use my fingers or I don't have to pop up a calendar and so on and so forth? Easy, okay? All you need to do is start your formula. You're going to select the date. So in this case, June 7 is my date. And I'm going to just simply add 3 days, right? And that's going to tell Excel you're going to add 3 to the June 7th date. And that's going to give you a date of June 10. Okay, so again, Excel can also help you keep track of dates as well. Okay, so there you go, right? And if you have advanced Excel experience, right? You're also able to use the if function, right? So when you do if functions, right, you can even tag on here, right? You can use it to make so if you can make a condition, right? If it's past this date, if it's this date, then you can flag it down, right? You can use color coding to say, yes, I made a payment to this bill. No, or when the date arrives, is this bill due on this specific date? You can do that, right? That's the thing about Excel is you can maximize the formulas on here and put a what if condition or a color coder where if it hits a condition, it will flag you down whether it is a positive or a negative. Okay? And let's see, how much was this bill out for? It's $4,000. And once again, we did not make a payment. So therefore, if I didn't make a payment, that means I owe Kim some money. So let's take a look at my formula once again. I need to use my invoice amount, subtract any prepaid, subtract any return, subtract any discount, subtract any payments. So therefore, I owe Kim Robinson $1,000. Okay, I owe Kim Robinson $1,000. All right. Any questions here so far?
No.
All right, let's see. Let's go ahead and stop here for today because this next transaction is going to actually take a while to complete. And I think we can just go ahead and finish everything up tomorrow. So I'm going to stop here for today. Okay? All right. So save your work. All right. And other than that,